Sustainable Economics, Real Estate Systems, Episode 5, the $19 billion secret holding back real estate. Why is buying a home still so hard? Mortgage rates remain high, home prices continue setting records, more homes are coming onto the market, yet affordability has barely improved. According to the National Association of REALTORS, existing home sales slowed again while mortgage rates climbed back to around 6.5%. Redfin also reported that inventory continued to improve, but buyers still aren't seeing much relief. So, if there are more homes for sale, why isn't buying becoming easier? This week, one number kept appearing throughout my research: 19 billion. And at first, it looked like another blockchain statistic. It turned out to be a clue about why buying a home still feels so difficult. Welcome back to Sustainable Economics, Real Estate Systems. Every Monday, we examine one question that affects every future home buyer. Is buying a home becoming easier, or are we still moving in the wrong direction? Earlier this month, we looked at how tokenized home equity lending has grown into a market measured in the tens of billions of dollars. Meanwhile, direct tokenized real estate remains dramatically smaller. At first glance, that seems backwards. Shouldn't putting houses on chain be the bigger opportunity? This week's research suggests something different. The difficult part isn't moving money. The difficult part is coordinating everything surrounding the house. One story from this week's research illustrates that perfectly. RealT became one of the largest tokenized real estate platforms by allowing investors around the world to purchase fractional interest in rental properties. On paper, it looked like the future many people imagined. Digital ownership, fractional investing, blockchain-based property records. But according to reporting by Wired, many of the most serious problems weren't happening on the blockchain. They were happening at the properties themselves. The city of Detroit alleged thousands of housing code violations and filed suit over hundreds of properties that reportedly lacked required certificates of compliance. Outlier Media also reported unpaid property taxes, utility bills, maintenance issues, and investor distributions slowing as operational problems mounted. Whether you're enthusiastic about blockchain or skeptical of it, there's an important lesson here. The blockchain wasn't replacing property management. It wasn't replacing inspections, maintenance, compliance, or everything else required to keep a property operating. The technology could help record ownership, but the physical property still had to function. And that lesson extends far beyond one company. Buying a home isn't difficult because moving money is difficult. It's difficult because people still have to coordinate around a physical asset. The buyer, seller, and lender may all be ready to close, but they're still waiting on inspections, paperwork, and everyone else involved in completing the transaction. Every additional handoff creates more waiting, more paperwork, more communication, and more opportunities for something to go wrong. Meanwhile, according to this week's announcements, Circle received approval to establish a national trust bank. BNY expanded support for USDC, and financial institutions continue investing in tokenized settlement infrastructure. Notice the pattern. Money is becoming easier to move. Homes aren't. So that's the story this week's research is really telling. The financial infrastructure surrounding real estate is becoming faster. The property infrastructure itself still isn't. So where I'm leaning. Mortgage rates remain elevated. Affordability remains difficult. Transaction volume remains weak. At the same time, regulated financial infrastructure continues to advance. And that suggests the technology for moving value is developing faster than the systems needed to coordinate property itself. So, for buyers, that probably means the home buying experience isn't about to become dramatically simpler overnight. But it also points to where the next wave of innovation is likely to happen. Not by replacing homes with technology, not by putting every deed on a blockchain, but by making the process surrounding property ownership simpler, more transparent, and easier to coordinate. That's a trend I'll be watching each week. If you're new here, I'm Daniel Morris, and I'm building PropSwap. The purpose of this series isn't to chase headlines. It's to study housing, finance, regulation, and technology together to answer one question. When will buying, selling, and owning a home finally become simpler? Because better real estate doesn't begin with better marketing. It begins with better systems. Thanks for watching, and I'll see you next Monday.